if I make a list of all the things that cause Bitcoin to trade down, right? If I make a list of the parade of horribles, right? Let me name my pain. and they're all going to reasonably reverse in the next decade. But here's what they are. One, wash trading. You can wash trade crypto and you can wash trade Bitcoin, and there are no wash trading rules. This is volatility inducing. This is not good, because it means that if you trade down 10%, you're probably going to trade down another 10%, because people are going to, a trader is going to say, I'm going to sell it at a 10% loss and buy it back at a 20% discount and ride it up again. So wash trading is an immature affectation of the asset class. You shouldn't be able to do it. It could be fixed by Congress and the House Ways and Means Committee. When the IRS or somebody fixes it, then the crypto exchanges, offshore and onshore right now, are unregistered, unregulated, and they offer 20x leverage. They don't have mature Chinese walls separating their market makers. Sometimes they make a market. In some cases, they own some of these tokens. They unilaterally decide when to list them. There's information leakage. And if you had 20x leverage trading on Apple stock with no wash trading rules, Apple would be a lot more volatile asset. And so with the NASDAQ. So the unregulated crypto exchanges are liability number two. The third is the crypto tokens, 19,000 unregistered securities. Okay, like I have one that's a commodity. If you look at the next 25 by market cap, they're all securities. Okay, in fact, you might be able to find 6 things or 12 things out of 19,000 that can make a straightforward legal argument as being without an issuer and therefore a commodity. But what you have is a $400 billion cloud of opaque, unregistered securities trading without full and fair disclosure, right? And they're all cross-collateralized with Bitcoin, right? When Luna shot to the sky, they're buying Bitcoin, and when they're crashing, they're selling Bitcoin. So if you look at ETH and you look at all the other crypto tokens, they tend to trade with a high correlation to Bitcoin, because on Saturday afternoon, you're pledging Bitcoin as collateral against your Solana margin loan as it crashes, and you're getting a margin call. So I think the story was like, and that takes me into my number 4 point, crypto hedge funds, or what we'll call the wildcat banks. Luna was one, but Celsius and there's a whole list, right? 3 Arrows is crashing today, I guess. Well, in some cases, right, you take 2 million people's deposits and then you bet it in a DeFi protocol. Okay, so they're unregulated banks, they're unregistered investment companies, they're trading unregistered securities,
and a lot with of
20x leverage.
And a lot of people are getting hurt, absolutely.
Including Bitcoin, right? I mean, it's a liability to Bitcoin, right? You have wildcat banks that are wiping out, okay? Then the 5th liability is ignorance. Just a lot of people, they go, every time someone criticizes crypto, I go, well, if you use crypto and Bitcoin interchangeably, that means you don't know what crypto is, and that means you don't know what Bitcoin is either, right? So it's a meaningless phrase.
I get that a
right?
lot. Yeah.
Like Bitcoin is exactly the diametrically opposed opposite of just about everything else in the crypto space, right? The fact that they're actually conjoined is one of nature's great ironies. Okay, so.
But that's where then regulation actually becomes a favor, positive for Bitcoin.
That's true. And the lack of regulation has allowed all of the wildcat crypto hedge funds to have a meaningful impact on the price of Bitcoin. Right. And if they actually regulate them and they take out those crypto hedge funds so that they can, and the crypto exchanges, so they can't exercise undue influence over the price of Bitcoin, it would do a lot of things. It would immediately decrease the volatility. But there are a lot of mainstream banks, mainstream insurance companies, mainstream market makers, mainstream investors that won't invest in the asset class because of the slime that gets onto the asset class from all the other unregistered securities, which have created a very bad reputation for all of us. Never ending. It will never stop, right? Are they solvent? Will they be solvent? The closest thing to a stable coin is maybe Circle or the Paxos offerings, right? Because there's some clarity. But, if the SEC said, okay, you have to file your assets at the end of every day, like that's what they do with an ETF or an ETP, right? Like if you're ARK investment or you're something, you're actually publishing what you're holding.
Right.
So if there was clear high frequency transparency and they said, you have to hold this mixture of assets and you have to publish every week or every day, you would have a stable coin. And then, of course, all the money that was sitting in the quasi-stable coins would probably migrate to the stable coin. The overall stable coin balance would increase. But, there was a point when there was like $18 billion of UST, quote unquote, stable coin holding, and that went from 18 billion to zero, right? So if we have a reliable, regulated stable coin, that would be good for the industry. That would decrease volatility. That would increase credibility. The lack of a spot ETF anointed by the SEC is another example, because if I don't have a spot ETF, then I have to ask the question, what's the real cost and how credible is the futures-based ETF? And now I'm gambling. Why can't I, if we eliminated the gold spot ETF and we didn't have it, it wouldn't be good for the gold price either. It wouldn't be good for the asset class. Then you've got the agencies, FASB, FDIC, SEC, CFTC, right? Clear guidance. FDIC doesn't let banks hold Bitcoin. FASB gives you prejudicial accounting. SEC hasn't clarified they don't need to clarify what's a security. They need to clarify what's a commodity. The SEC ought to actually say, these are the 4 cryptos that we deem as commodities and don't come under SEC rulings. Everything else is a security. And then finally, a lot of people that are bears, say, well, there's no clear use cases for Bitcoin. And the clear use cases are going to be on the Lightning Network, on the layer 2 and the layer 3. And so as Block and Square and Cash App and PayPal roll out better offerings, and as all the companies, like my company's working on Lightning offering, as other companies roll out Lightning-based offerings, then people are going to say, okay, well, this is the base layer, but there's layer 2, layer 3 ecosystem. And they're going to get very comfortable that this is high velocity money, right? Why is Bitcoin the best money in the history of the world? Well, first of all, because you can't make any more of it and you can print a lot more gold and a lot more paper. But second of all, because it's money at all frequencies, it's money you can reasonably hold 100 years without trading, but it's also money that you can reasonably hold for 100 milliseconds before you trade it, right? And if people start to see that I can move this money 100 times a second for no cost, and you can do that on a layer 2 or layer 3, and you can't do that with the Visa network, and you can't do that with gold, and you can't do that with fiat balances in a mega FDIC approved bank. So when people see that it's high frequency programmable money and it's also low frequency store of value money, and it's better than Visa at moving money fast, and it's better than gold at holding money a long time. When they see that, then light bulb goes off and they go, wow, this is a better way to store money. And then, of course, why would I hold a big bond fund yielding 3% for 30 years, right? I mean, you're not giving that money to your grandchildren, generating 3% yield right now. It's just not going to happen. If I can kind of put a cherry on that top, the big idea is none of these things are getting fixed in the next 3 months.
No.
Right. But on the other hand, if you look at a decade, everything I just named, 80% of it will probably get addressed, in the next 10 years. So you have milestones to hit. And as the milestones get hit, the credibility of the asset class and the maturity of the asset class and the utility of the asset improves, the risk decreases. And that not only grows the asset, but it kind of encourages people to demonetize another asset.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.